H-I-G. The Hig way.
The Hig way. Yes, It's all about the Hig way. What's going on, everybody? This is MattyP, and I'm here with your host, Bronson Kaufusi. What's up, Bronson?
Hey, how we doing?
Oh, man, rolling right along.
I like it.
How was your week? You were in California, right?
In California. It was pretty incredible, actually. Yeah. I was able to go down, meet with some folks, some different family offices, investors, and it was great. And got to take the family to Oogie Boogie Bash at Disneyland, which was fun.
Oogie Boogie Bash.
Oogie Boogie Bash.
Never heard of her.
It is. It is. The park gets closed down at 6 o'clock. You can go in at 3 o'clock, but they shut the park down at 6 o'clock for only those who have bought the Oogie Boogie Bash ticket, and then it turns into like villains everywhere, and Oogie Boogie and Jack Skelton, and I can't remember the girl from the movie right now, but my kids love it. But yeah, they make it a Halloween special pretty much.
So it's kind of like Frightmares, like Laguna's Frightmares, right?
Just like that, but with Disney Halloween stuff. So it's actually pretty fun. So I did that.
Well, welcome back home to Utah.
It's good to be back.
Welcome back. We're here at the Harris Financial Center, as always, up here on the 7th floor, making a podcast. This is like the best part of my week. I love the podcast.
Me too.
Well, we're here today with a very special guest. First to the podcast, but certainly before I was here at Harris Investment Group, someone who's near and dear to all of our hearts here in the USA and Canada. We have Chuck Matheny.
Hi.
Chuck. How's it going, Chuck?
I am here. Yes. Thank you for having me in on the podcast. This is the first time I've got to be in the booth. So I'm feeling very special today.
Well, I can tell that you're nervous, but you're sweating, but it's okay. There's one question I've been dying to ask you ever since I started working here.
Yeah.
Have you ever owned a pair of Chuck Taylors?
Chuck Taylors? I don't even know what Chuck Taylors are.
Oh, we should get him a pair of Chuck Taylors.
I'll take that as a maybe.
Yeah.
We should get him a pair.
Yeah.
Get Chuck a pair of Chucks.
Named after you,
What
Chuck.
are Chuck Taylors?
It's a
white
shoe.
Converse. Right?
Yeah, white, black.
Yeah.
Have you seen Back to the Future?
Oh, yeah, yeah.
So, you know Marty McFly when he's back in 1955?
Yep.
The shoes that he wears, the black lace-ups, those are Chuck Taylors.
Okay. They're
And
like Converses.
Yeah, uh-huh.
Okay.
Oh, Converse. Yeah, I guess we could have said that. Because that's literally what they are.
Yeah.
Yeah.
No, I don't own any, but I have worn them before.
Let's get him a pair.
I'm up for that.
Next time you're on the podcast, Chuck, we're going to get you a pair.
All right, I'll be looking for my
They might be pink, though.
Chuck Taylors. No, I will not wear pink.
How about purple?
I'll wear a pink golf shirt, but no pink shoes.
All right, I feel you.
White. You wear a lot of white shoes, I noticed.
I like white shoes.
Yeah, we'll get you a pair of white ones.
Yep.
Those
Cool.
look rad.
Yeah.
Chuck rocking some Chucks.
Yep.
All right, well, that just about does it for today. Thanks for tuning in.
Hey, forget that. I thought I was here to talk about important stuff.
Well, we are, but first, Bronson, you know Chuck pretty well. You've been working with him longer than I have.
Yeah.
I can tell you that Chuck is a pickleballer. You mentioned he likes white shoes, right? He's a fly fisherman,
Yes.
a fisher of men as well.
That is true.
Very active in what he does at work and on the pickleball court and everything outside of work. So whenever we get time to sit down with Chuck, it's always a pleasure. But your role here, Chuck, what's your official title?
I'm the commercial real estate specialist. So my whole career has been in commercial real estate.
That's how you started, right, Chuck? That's how you started with Jason. Maybe tell us that story.
It is how I started with Jason, and it is how I started in commercial real estate. Jason was a neighbor of mine about 5 years ago, living across the street from me, and we just got talking real estate.
Yeah.
And I very quickly realized he was one of the world's greatest experts on acquisition of really good multifamily properties. And he realized that I had a lot of experience in commercial real estate from many different levels. And the more we talked, the more we thought we should combine interests, and what I do could help his company grow. And I thought the same thing. So I came on board, I think about 5 years ago.
And when you came on board, were you investing with Jason before, or were you mainly jumping on to help on the commercial side initially?
Yeah, I was mainly coming in to help on the commercial side.
Nice.
At that time, we'd purchased a few office properties in Orem, and we wanted to maximize the potential for those properties, and we acquired a few more, and it just kind of grew into a relationship that was very synergistic.
Wow. Okay, so I'm super interested in this because you came on the commercial side. You were Jason's neighbor. When did you become an investor with Jason?
I think after I'd been in the company or with the company for a year and a half, we talked a lot about moving from more of a syndication model to more of a fund model.
Yeah.
And there's a lot of advantages to having funds. And so when that decision was made, it just made sense on me becoming an investor on the new fund deals. And so I was quite excited about doing that.
Yeah.
So, and we did a few things. We acquired this office building that we're in here, downtown Provo, and we found out about some really great tax advantage strategies in investing in commercial real estate.
Yeah. Wow. And speaking of those tax advantage strategies, because it's a big part now of what we do here at Harris Investment Group, maybe you can discuss, and we're hinting towards the gas stations and truck stops that we do. How did Harris Investment Group get into that? Because you were a pretty integral piece when that happened.
Yeah, it was a nice evolution. We have always done what's called cost segregation studies in all the properties that we've acquired, all the multifamily properties. What that is that we look at what can be depreciated in year one of an acquisition of a property. And many times in multifamily, it can be up to 25-30% of the value of the property.
Yeah.
And we found out through some of our relationships with some of our vendors, particularly in the cost segregation world, that there are particular properties that have very aggressive depreciation strategies and benefits. And one of those includes gas stations and truck stops. And sometimes we can accelerate depreciation up to maybe 80% of the value of the purchase price. So huge tax benefits that are available on the first year. And we felt like that was a great strategy. So we decided let's buy some gas station properties.
Wow.
That was 4 years ago, I'm thinking.
Yeah. Or maybe even 5.
Maybe 5.
2019, I think, is when you guys started moving that way.
Yeah.
Wow. Okay. So
I have a question kind of going along those lines.
Yeah,
Sorry to cut you off.
You're good. Go ahead.
Did you know how big truck stop investments would be initially?
No idea. Yeah, no idea.
You had no clue that they would be as substantial as what they are now, or offer what they offer.
Yeah,
right
no
now.
idea. I think our first purchase was a little $2.5. I say little, but it was a $2.5 million purchase of a truck stop, gas station, convenience store in Iowa. It had a McDonald's attached as part of the convenience store. We thought, well, this would be a good one to start on. And we had no idea that would evolve into what we are now, where I think we own 30 different gas station properties. And we've continually evolved into getting, better and better product, better and better returns. And now we almost prefer portfolio purchases versus, onesies, twosies. And we really love truck stops versus just your smaller gas station convenience stores. And we found that we have a preference as to who is the operator of the truck stops, because we want our operators to make a lot more than we are in rent as an investor in the land, in the real estate.
So operator, what exactly is that? Can you explain that a little bit?
Sure. So we're not in the business of operating a truck stop. We don't want to sell gas and sell convenience store goods or operate a restaurant or food use within the facility, but we want to own the real estate and have the benefits of the real estate. One of the nice things that we realize as an owner of the land is that we don't have to worry about paying taxes, paying utilities, keeping inventory. I mean, all those things are done by the operator. And so what we are looking to do is just be the owner of the real estate, know that we have a long-term 20-year lease. It's a triple net lease. The tenant is responsible for all the real estate, including environmental reports and things related to having an underground storage tank. And we want to collect rent and know that that rent is reliable, and we can have a nice cash-on-cash return, knowing that down the road, 5 years from now, we can sell that property at a profit.
So we're the owner.
We're the owner of the real estate.
And then the operator comes in, operates the truck stop or
Yep.
the gas station.
Signs a long-term lease with us.
Signs a long-term lease.
Usually a 20-year lease.
With us.
Uh-huh.
So they pay us.
Right.
We hold on to it for 3, 5, 6, 7 years.
Mm-hmm.
And then we sell it for an increase.
Yeah.
Sweet.
And the nice thing about a lot of the equity that goes into buying these gas stations are investors, clients who invest alongside with us to not just get a good cash-on-cash return on the investment, but they're using monies that would otherwise be tax dollars that they'd be paying to the IRS. So if you can take that tax money and instead of paying taxes, legally buy good real estate that will cash flow and build up your real estate portfolio, who wouldn't want to do that?
Yeah, that's honestly one of, I think, the most impressive things with the truck stops and gas stations, and just oil and gas in general. There's within oil and gas, there's just unique benefits, and incentives that create great tax efficient investment vehicles, and gas stations is one of them.
Yeah, not just the cash on cash return, but the depreciation, the tax benefits. Absolutely.
Yeah, because there's some interesting opportunities where certain investors can take the depreciation and use it against passive or active income, just depending on how they're working with their CPA. And we're not CPAs, but it's important to know the different benefits of your investments, and taxes is a big part of it.
Yeah.
It
really is. It really is. And because we're now very heavily into that space, we have developed some, I would say, fantastic relationships with sellers of these kinds of properties, brokers around the country who specialize in these properties. And we have a reputation. So oftentimes they'll bring us an opportunity, a purchase opportunity, even before it gets published to the world, which translates to us being able to achieve a better return than someone might just looking to buy a gas station for the first time. And so a lot of the properties that trade in this space, like if it was a 7-Eleven or Circle K or Quick Trip, you might be looking at buying something at a 5%, 5.5% return. We've been really fortunate in the last few deals that we've done. We've had really good operators, but we've been able to achieve annual returns right out of the gate in excess of 9% a year.
Yeah, that's strong.
Which translates to a really good cash-on-cash return. I know interest rates have kind of moved up and moved against us a little bit, but still, we are able to show right off the bat when we close on a property, really good cash-on-cash returns. And I always try to build in an annual escalator in the rent, so it's going to increase over time, and that translates to a more likelihood that we'll be able to sell at a profit when we do want to sell these properties down the road.
Yeah, and I think, speaking of that, I was actually with family office earlier today, and I was with their CFO, and I was discussing the truck stops, and they have some, they own a few of them, not truck stops, but gas stations. And one of their questions that they asked, and I want to ask you, I think it'd be important to know, is on that exit with that asset, with that truck stop, who are the buyers? Who are, just from a general view here? Yeah, I think it's important for people to know. Well,
one of the nice things to realize is that the buyer-seller market in commercial real estate is pretty sophisticated. So things get published on on the internet with different groups, and there are buyers all over the country looking for good properties to purchase.
Yeah.
And so that's kind of a trading place where a lot of sophisticated brokers and buyers go to try to find properties. So we have a high level of confidence that we will be able to sell when we want to sell. And the object or goal that I have as a commercial specialist and broker is that if I can buy something at a 10% return, I would love to be able to sell it at an 8% or an 8.5% return. And I know if I'm doing that, especially if the income is improved, that I will make a profit.
And you're talking cap rate.
I'm talking return and cap rate.
Cap rate.
Cap rate and return, same thing.
Yep.
So if you buy high, sell low, you're always going to realize a nice profit.
Oh,
and then at that point, it's really up to the equity owners of the property to decide, do they want to just realize their profits, or do they want to then consider maybe rolling that profit into another real estate property where they can maybe avoid some capital gains taxes. And so a lot of our clients like to do that and continue to grow the value of their portfolio with us.
So it's just being smart with your money, being
being
smart with your investment,
Yep.
making your money work harder for you.
Yep. And who wouldn't? If you could take a $500,000 and turn it into 2 or 3 over 5, 6, 7, 8 years of wise real estate investing, it just becomes a good kind of a nest egg that you hope to realize down the road by being smart in your real estate investment decisions. And that's why we feel like Harris Investment Group has a real nice little niche that we've carved out and a reputation around the country. We're probably one of the biggest purchasers of this type of product in the country. And we have a really good reputation amongst the brokerage community of closing on every deal we put in escrow.
Oh, so important.
So far.
That's big.
So far. And that means that brokers will bring deals to us, and maybe the seller's not going to make quite as much, but they have a high level of confidence. Well, if you do a deal with Harris Investment Group, it is going to close. You're going to accomplish your goal of selling the property. And as we continue to do business with some of the same operators, they like to do business with us because we know each other, and it's very much a relationship business, and we value that relationship, and we want to treat all of our vendors really, really well.
Yeah, it takes time to build those relationships.
It takes time, and it takes time to build a reputation of being very reliable, very trustworthy, and very responsible.
Yeah. So maybe could you walk us through your favorite gas station deal that you've done? That's like, oh man, that was really, really, I really liked that. Was it that first one or?
No, the first one was definitely not the most fun.
Hey, tell us about your favorite gas station, and why is it Roots TA? No, I'm just kidding.
Yeah, no, we learn a lot in every deal, and you think, gosh, I'll never do that again. So it's not completely rosy, but I mean, one of the ones that we did was probably 2 that I would say, and they were deals that we've both done this year in the second quarter. One was an acquisition of a property in Ohio between Toledo and Cincinnati on a very, very busy north-south freeway. It was one of the first Travel America centers in the country, but the operator wasn't a good operator.
Is that Wapakoneta?
Yeah, Wapakoneta is the name of the town. Wapakoneta.
Oh, that's a good name.
It's an Indian name, I guess, right?
Yeah.
Yes.
Yeah.
Yep. I researched it. Yeah.
I think locally they call it Wapa.
Wapa.
Something like that. Yeah. Anyway, so we have a relationship with a great operator out of Atlanta, and they brought us to the table and said, hey, we're thinking we would like to buy this property, really ramp it up, go back to the TA Centers of America, the franchisor, and turn it into a modernized TA center. And they loved the location, felt like it would be very profitable for them as the operator. So we agreed on a price. Lots of land there, lots of opportunities for truck parking. It had a good restaurant, but it was very, very dated. And we agreed on an amazing return. I think our cap rate was 10.5.
Strong.
That's super strong cap rate.
That's correct. Yeah.
And it's just such a busy location because there's a north-south freeway. I think it's I-40, east-west. There's another freeway there. It's just a great geographic location. And there's so much opportunity for improvement because it's old.
Yeah.
So that's one of my favorite ones. And we really like the operators. And they're gonna make a lot more on the property than we will as the owners of the real estate. The other one I really liked was the one we did in Atkins. Mm-hmm. It was just a little bit north of Little Rock, Arkansas. Super busy freeway, east-west, I think between Oklahoma, Memphis. And when I did my site visit there, I realized there was a Love's truck stop 8 miles down the road. And I thought, well, I better check out the competition. And I went there. There was only 15 parking stalls for truckers.
Which is a big deal.
Which is busy.
They fill up fast.
And truckers, after 8 hours of driving on the road, they have to park. They have to rest. They have to sleep.
And I think it'd be important also to note that Love's, the competitor, the Atkins truck stop is a TA center, correct? Atkins TA center.
It was a conversion.
A conversion, right.
So then I went to go visit the site we were buying with a different operator out of Las Vegas. And they also were very high and very excited about this site because they were converting it to a TA center. And the site was very large. I think it was 16 acres. And they intended to pave about, 10 acres, so just for truck parking, so they could park 150 big semis on their site.
And how much did the other one have?
15.
15?
That's not crazy.
So I knew immediately they're going to steal all the business from the Loves, and it's going to come to the Atkins site. And so, sure enough, the operator was so excited about the property, they bought it even before they resold it to us. But they went through and converted inside the store, brought in a new Sbarro's Pizza, another restaurant, upgraded all the gas pumps. It already had cat scales, paved the whole lot. I looked at the paving. There was like a mountain full of asphalt that they were going to repave this whole site. And in addition to that, they're building a little shop next door to service, brakes and oil, et cetera, which will also make revenue for them. But it was just it was a great deal. And I think the return on that project was a 10% cap rate, 10% return. So 2 deals we've done this year that I would say are probably two of the best acquisitions that we've done this year. And, we continue to look. Usually the fourth quarter of each year is our busiest quarter. People are realizing, oh, no, I got to pay all these taxes. I really need to take some of this money and buy good real estate where I can take advantage of some of these depreciation strategies. So we'll have a busy quarter. I think this quarter will probably have, I know right now it looks like we'll have 4 or 5 deals in escrow. And it might be, totaling $75 million worth of real estate, which would mean we're probably going to have, 35 million equity that will be coming into the deals that we're trying to close last quarter. I hope we can get them all closed and financed in less than 2.5 months. That's why we're crazy busy here right now.
Yeah, it's a lot of fun, though.
It is a lot of fun. The most fun I think I have is just the people in our company. We have great people in Harris Investment Group.
We really do.
What are we up to? 16 now total?
Yeah, 16.
16 in
solid
the
corporate side,
executive corporate side. Yeah. So we have a lot of fun. And we solve problems, and it's a great company. We just, our clients seem to like us and want to do repeat business with us. So it's been super fun. And I have loved being the commercial specialist with Harris because it's just a great opportunity, and I invest in every deal that we do. So to me, this is just a great way personally to build wealth in the real estate world, and I just think we've got a great niche and a great strategy in going forward.
You invest in every deal.
Mm-hmm.
So, that's a statement right there. Like, you're not just here doing your job, but you believe in these deals enough that you personally invest in them.
Absolutely. Yeah, absolutely. And it's very fun to know that I can see all the moving parts in each and every deal. So I have a lot of confidence in not only in the quarterly cash flow that we'll realize, but in the ultimate goal of achieving wealth and growth through good investing in real estate.
It's a big deal to have. I was going through the 16 people, and I think it's half or over half of those 16 people invest here.
Oh, I think so too.
I think it's over half.
I think most of the employees in Harris invest in our real estate.
Yeah, which is important.
Yep.
And I think it's like MattyP, like you said, it's a big deal. And
well, didn't you come into Harris, Bronson, because
I was an investor first.
You're an investor first.
I'm an investor first person. I did the kind of opposite than you. I went investor first and then joined.
You and Jason bought an apartment together.
Yeah, we bought an apartment complex together, and
turned out well.
Turned out really well. Yeah, kept it going.
Well, I have one last question for you, Chuck.
Sure.
So I got a phone call from an old principal at a high school out of. He asked if I knew anything about a senior prank where some students put some steel-belted tires up and over a flagpole that took the janitor about a month to cut down. Do you know anything about that?
I confess. I confess.
Red-handed.
When you're a senior in high school, you got to do a prank, right? Right?
Yeah. Well, it's a different day and age these days, but yeah.
So I'll tell you the quick story here. So senior year in high school, I had a couple of friends that worked at a tire store, and I thought, what are we going to do that would top any prank that's ever been done in this high school before? And so at 1 o'clock in the morning, we erected scaffolding around the flagpole.
Oh my gosh.
They raise a flag every day in
the school,
at the school. And so we erected the scaffolding, and I think there was 12 of us, and we passed tires up the scaffolding and dropped steel-belted radials over the top of the flagpole.
That is crazy. All the way up?
all the way. So there were, I think, like 20, 30 tires.
And an emphasis on steel-belted.
Steel-belted radial tires over the flagpole. And then we knew we had to completely clean up and make it spotless so no one would know what happened or how it happened. And we swore everybody to secrecy
until today.
Yeah, until today. And the next morning, when they tried to raise the flag, they couldn't, and they were mad.
Oh, I bet.
I felt really bad for the next week.
Oh,
the custodian was out there with his hacksaw, sawing all the tires
all the steel-belted tires.
So that was the senior prank that Chuck Matheny and his buddies did that to this day. I think most of the rest of us are still sworn to secrecy.
Remembered forever.
And I'm not going to say where the high school was.
I think I said so I'll just bleep it out. I want to say I'll bleep that out too. But it was
some high school that no one knows.
Sworn to secrecy.
That was in my young and irresponsible days.
That's all right. Everyone has those. Thanks so much, Chuck.
Oh, thanks for inviting me. This has been fun. Hope it hasn't been boring. And super happy and lucky and fortunate to be a part of Harris Investment Group.
I feel the same. And we're loving bringing everyone on here to interview them and ask them questions about all the things that are going on here. So if you do have any questions, reach out, contact at harrisinvestmentgroup.com, email us. We'll answer some questions as we go, but appreciate everyone taking the time to be on today and learn so much about real estate, gas stations, truck stops, all the above.
Oh yeah, thanks a lot, Chuck.
Thanks for the invite, and look forward to fun days in the future.
Also, thank you, Liti Akanaka, our producer of this episode. Thank you for putting this together and helping us get this out on the air. And high fives, slap hands.
Hope to find your dad. Has to be on there. It's not official.